Hello, everyone. Welcome to Degens for a Brighter Future. My name is Jorge, your host today, and I'm with Alex Lupascu. Am I saying that right?
Yes, that's great. Hello,
Hey,
everyone. My name is Alex.
I'm glad I got that right. For those of you who don't know who Alex is an entrepreneur, cybersecurity expert, cryptographer extraordinaire who's been working in the blockchain industry for a very long time, as well as the public sector. With years of background in cryptography and privacy, he's now working as a co-founder for Omnia Protocol, which seeks to create an off-chain privacy layer for users of the Omnia technology. How are you doing today?
Thanks for the introduction. I loved it. I'm very good, thank you. I think right now it's around 9 p.m. at my side, so it's a bit in the afternoon. But I had a very productive day, so I'm happy.
Excellent. That's what I like to hear. So I know right now we're in the middle of what seems to be an awfully crazy world. You know, perhaps the person that's watching this is viewing it during the bear market. And so my first question I wanted to ask you was just to tell me a little bit about yourself. You know, your background is so extensive. What made you move into the private sector? And as a cryptographer, what brought you into the blockchain space?
Yeah, so basically I started working with blockchain-related technologies and blockchain since 2013. I think Ethereum was just starting at that point. My background, of course, is in engineering. So I'm an engineer at the core. I also worked as a, let's say, national defense system in Romania, mainly on cybersecurity aspects. So cybersecurity for national defense, that was the sector in which I activated. And then at a later point, I decided to switch to academia and then to private sector, where, of course, I did multiple works around the blockchain. I have a pending patent with a self-sovereign identity solution in a privacy-preserving way. And of course, last year, I think in January or March, I was researching some of the privacy aspects in blockchains. And this is how I found with my brother, Christian, he's the other co-founder and he's the CEO. I found this gap with off-chain privacy that no one was looking at.
So, you know, a lot of people who are coming onto this, they're much more familiarized with on-chain privacy, you know, tools like Monero, Zcash, and obviously, controversially recently, Tornado Cash. So for those who are watching, can you break down a little bit what is off-chain privacy and why when you're accessing cryptocurrency, whether it's a layer one smart contract blockchain or any other type of blockchain, why would they need to be concerned about off-chain privacy?
Sure. So first of all, I will make the distinction between on-chain privacy. As you put it very well, there are solutions such as Monero, Zcash, Tornado Cash. All of these solutions, they rely on zero-knowledge proofs. They rely on ring signatures. So all these technologies, what they help you achieve is privacy on-chain. For example, they protect the amounts and the recipients of a specific transaction after it has been included in a block in a specific blockchain. But there is an entire, let's say, pipeline before that. From the moment where you sign the transaction on your phone, maybe it's a wallet on your phone or it's a hardware wallet, from the moment you sign the transaction until it gets broadcasted through the entire network, broadcasted to the nodes, and then stays in a public mempool for a period of time when it's in a pending state. Because as you probably know, a transaction is not included right away in the blockchain. In some cases, for example, Ethereum, we need to wait. One block time is 15 seconds. If you look at the Bitcoin, it's a bit longer, maybe it's 15 minutes. So there is a specific time window where your transaction it's in a pending state. And there is a process of information passes through different systems before it reaches that point on chain. And here is where we found the gap, actually, because most of the people think that using on-chain privacy solutions is enough. But in fact, you can still map all of the activity with IP addresses, social media tracking pixels, and map all that on-chain activity with persons or identity from your real life using IP addresses and all that metadata and behavior analytics.
Yeah, and I think that like brings back, you know, some of the challenges with Web 2 at the moment. you know, there's a big lack of privacy, and, you know, you're constantly being tracked. Like, I'm getting an ad for every little piece of equipment I'm looking for, as far as like shooting and recording is concerned. And in the same light, that type of information can also be tracked, you know, on the blockchain, because everything is facilitated on the internet first. So as you're accessing these things, then that's where you might want to obfuscate that information to create privacy, as far as like who actually owns this wallet, what's their social media, and all that other jargon. No?
Exactly. Yeah. So I would make a distinction that I think is very important. The off-chain privacy that we refer to, it's not something that, let's say, helps the bad guys hide their traces or all that stuff. It's mainly about consumer protection, because the lack of this privacy that we speak about, it has two large consequences. It's two-folded, right? One of them is physical risk, physical security. It might be seem a bit far stretch, but we've seen cases where people were being kidnapped because bad guys were able to extract information about their location, about their social media profile, based on just a simple Ethereum address. But it's also about preventing too much data being leaked out there in terms of your behavior online, because all this information helps the bad guys to create spear phishing attacks. So they're able to extract a lot of data about you, about what you're going to do in the near future, such that they come with a social engineering way in presenting an offer to you that is very appealing. So especially for people who are not that familiar with cybersecurity and how to approach things in a secure way, it's very easy to step on a trap that they put with spear phishing. So that's one part of the risk. The other part of the lack of privacy risk is a financial one, because if you look about how DeFi transactions work, basically you want to sell or buy, let's say, 1 Bitcoin or 1 Ethereum on Uniswap. You make a transaction, but you still need to wait for that transaction to be mined, to be included in a block. And that is a specific period of time where you are vulnerable in terms of privacy. And I will make a short comparison because it's much easier to understand. So let's say that tomorrow you want to buy a lot of apples in the market. In the fresh market, you want to buy a huge amount of apples. If you disclose that intention beforehand, someone can go 10 minutes before you or 1 hour before you, can buy the entire supply of the apples. And then when you arrive, it's going to send the apples with a 10% or 30% premium. So you actually pay more because someone learned about that intention and front run it. The same thing happens in DeFi transaction. There is a specific parameter on Uniswap. If you go on settings, Pancakes Swap has it as well. It's called the slippage parameter. And basically what that parameter means is that you accept a specific movement in price up or down, because the moment when the transaction is included in a block, in that period of time, the price might fluctuate, right? So you accept beforehand a 10% increase or decrease in price. And what these bad guys are doing, front runners, is that they detect a specific transaction when you want to buy an asset. They put a transaction before that. They buy a large amount of assets. They inflate the price such that you buy the asset with an increased price. And then they put a third transaction where they sell back all the assets that they bought in the first place. So basically, it's like a sandwich attack. They put a transaction before and one after you. They are using gas prices to prioritize these transactions. But in the end, what it happens is that you have a financial cost, let's say, loss, because they inflate the price and you pay with 10% more. And the core of that issue is that there is no privacy of the intention. We call it, there is no pre-mining transaction privacy. And these are some of the subject areas where we work at Omnia Protocol.
I think that's pretty wild that people can just front run your information if they already know what you're doing in advance. I'm actually curious, you mentioned that, and it's funny, I actually just finished making some content about Tornado Cash that'll be up tomorrow. But you just mentioned that this is a tool, or for lack of a better word, and it's meant for consumer protection, not for the use of criminals. So out of curiosity, especially with all of this being so fresh, how is that going to be avoided, or what are the steps that Omnia is taking in order to prevent malicious use of the software?
Sure. So what we have right now, we have integrations with different technology providers out there. Providers such as Chain Analysis, Elliptic, there are big providers with very powerful tools in terms of assessing whether a specific address, let's say, belongs to a sanctioned person, a sanctioned address, which is on an OFAC list, and that kind of information. So basically, through that integration, what we are able to do, because we have a pretty unique position in the market. We are between the user, like the apps, the wallets, and the blockchain nodes who actually include the transaction in a block. We are this middleware between, where we secure this connection. And because we are in this position, we are able to simulate, to do a dry run of each transaction that passes our system. And we are able to see where the assets move from and where they go, and use these two sources and destinations to check against sanctioned lists, sanctioned persons, to see if it's a malicious activity or not. If it's not a malicious activity, we let the transaction passes through and benefit through for that privacy and secure channel. If we detect that it's linked to an illegal activity, I don't know, something about the sanctioned persons, maybe linked to an activity of buying drugs on a dark web store, something like that, we are able to drop the transaction at the edge of the protocol, such that we do not process all those transactions that are illicit.
Interesting. And so the software itself is able to detect when this type of activity is going on, or is it that you are inputting these wallet addresses and then they go into the software, and then those wallet addresses are no longer active or able to use the Omnia?
No, the software does this by default at the middleware layer. So basically, we have right now our MVP is live from 1st of January, from the beginning of the year. We also put there, we linked a tutorial for anyone if you want, it's curious to see how they can customize their MetaMask wallet with a secure connection to a specific blockchain, be it Ethereum, Binance Smart Chain. They're able to generate a secure connection and configure it in the MetaMask wallet. So it's something for the general public as well. Of course, we are also going after businesses. We have a strategy B2B oriented. But in general, once you put that connection, secure connection into your wallet or your application or your wallet will use that, let's say, channel to read and write data from the blockchain. And when it's doing that, the software automatically does this. So there is no manual intervention. All the, let's say, sanctioned lists and addresses are updated in real time. And the system is able to deserialize each transaction that passes the system and be able to react with no delays.
Interesting. So it's like a decentralized way of keeping someone off. Like there isn't a person who pushes a button and then suddenly that address is blacklisted. So that's very interesting. And I wanted to know, so one part of the white paper that I was interested in discussing as well was the use of mixnets and like using that to leverage privacy as well. So could you describe mixnets for the viewers and how that helps to leverage the nodes in such a fashion that it creates a more private layer on the off-chain privacy?
Sure. So Mixnet basically is the core technology that we use when we want to protect the secure channel. And I will make a very simple comparison with the Onion router, Tor. I think it's very popular for private browsing. Lots of people were using it back in the days. I don't know if people still are using it. But when we did our research to identify and ideating a solution on how to secure this channel, this middleware, we of course looked into VPNs, we looked into Tor, and then we reach out to Mixnets. So to break it down on each category, VPNs, they help protect the privacy at the network level. But as mentioned before, there is an issue with being front run. That's not an issue that you can solve with VPNs. It's mainly something that to solve at the application level. So we needed to go a bit further into the problem. Then we looked a bit at Tor, the Onion router, and there is actually research. We found out that almost 50% of the nodes of the Tor network it's owned by state-sponsored actors, and there are actual ways of how you can still de-anonymize users. And the basic idea how it works, because it's like a building block for mixnets, you have 3 hops. Let's say you have these 3 hops. First one, it's an entry point. The last one, it's an exit point. So for example, when you use Tor browser to visit a specific, let's say, web page, basically the request to pull that web page goes into the first entry node. Then it adds a layer of encryption, forwards this request to the second node, which adds another layer of encryption and sends to the third one, which is removing all the encryption layers and its exit point towards the website. So basically, in between these nodes, all the information is encrypted, and in theory, you are not able to see where the transaction, where the data is coming from and where it's going, which websites are you visiting. But the issue is that if you operate and control both the input node and the exit node, you are able to correlate based on timing information about what comes into the system and what goes out of the system. So it's basically you can just circumvent all this part and you make the link between direct the user and the website that they are visiting. So there is actual proofs of how users can be de-anonymized in Tor network. And Mixnet is like the version 2.0, which is an improved version. There are different players out there. Of course, we don't want to reinvent the wheel. We have discussions, partnerships with different providers out there who are doing great stuff. But a basic idea is that instead of having only 3 hops, these 3 nodes, imagine that you would have multiple nodes, for example, 5, 10 maybe, and multiple layers. And what it happens when you pass data through this system is that right at the entry point, the information is split in tiny pieces, which have an equal size packets, and they are shuffled through the network. So they have a random order where they go through different pieces, and they exit through different, let's say, exit points. And in the end, it's able to put all the small packets together and send it to the destination. And one reason to do that is that because of the size of the packets that is flowing through the network, it's very hard to make any correlations about what comes in, what comes out, because every packet looks the same. Also, in the same time, what you can do and implement in this mixnet is add delays. So basically, you add some kind of obfuscation, because when you spread a packet in multiple small ones, and you send different small ones with different delays, it helps with that obfuscation of not being able to do timing correlation. And on top of that, we have also decoy traffic. So what you can do if you are a specific node of this mixnet, what you can do, you can send traffic basically like a loopback to yourself, but you just add noise into the system, because that packet, even though you send it and it goes back to you, it's still broken in multiple pieces, passes the entire network, and then reaches back to you. And if we have every node that adds that noise, that decoy traffic, it's adding a lot of blur, right, in the network, and it's then even harder to identify and correlate information in and out. So that's mixnets, and that's the core of the security, let's say, layer of communication.
Interesting. I mean, it's definitely something I'll have to go through again and again and again until I get it 100% right. But it's incredible that there's so many different layers that makes it that incredibly complex to try to track all of that information. And out of curiosity, so I guess the next thing I wanted to ask you, so obviously there are these endpoints that we can track, you know, as far as prior to the transaction occurring, you know, online. When it came to, say, a web mixer, like, say, Tornado Cash, do companies like Chainalysis, or do you think governments are using or finding that information to catch bad actors? And if so, I don't know if you're aware, but how successful do you think that method would be? Or are the bad actors using some type of technology that most people are not familiar with in order to encrypt that type of information?
Yeah, so I think in general, Chainalysis and other providers, I don't know that well their technology and how they build their database. Of course, what is regards with the sanctioned persons is something official issued by OFAC, like the special agency that is naming all those SDNs, like the special designated nationals, the ones that are sanctioned. But in the same time, what they're able to correlate is information through on-chain analytics. So basically, they look on all the activity on-chain, where the information goes to, where it goes from, and in the same time, they're also leveraging information from other sources. And here, just throwing some suggestions is not something that I'm 100% sure on, is that people usually talk a lot on forums, on all kind of, let's say, channels, and all these activities leaks some metadata, some behavior analytics about you. And if you have like a really strong system that is able to correlate all these small points throughout the world, you are able sometimes to identify that maybe a specific Ethereum address is tied to a specific, let's say, hacker entity or a specific person. Or in some cases, it's also the mistake that they do. There is a, like, I think it's a celebrity. It's a good example, Jimmy Fallon. So what he did, basically a mistake on a show. It was a live show. He showcased his Bored Ape NFT, right?
Right.
So everyone, I think, knows about NFTs, that they have this unique, they have elements, and some of them are unique. For example, you have a gray hat, or you have some glasses, you have a chain around the neck. So basically, just based on the appearance that you can see on the television, you're able to go on OpenSea, find the collection or Bored Ape, scroll through all the NFTs, and identify the NFT with the same elements. Once you did that, you are able to see what's the actual owner of that NFT, and that's how he get doxed. Basically, if you search right now on Etherscan, Jimmy Fallon, there is a Ethereum address which has a tag with his name. And that's, of course, some people do that kind of mistakes, but that's an example of how easy it's privacy to be leaked. And then to move further to what kind of consequences there are right there. As you mentioned before, with Tornado Cash being banned, there are some people who actually after the ban, they use Tornado Cash to anonymously airdrop like 0.1 Ether in all these celebrities' wallets. So right now they are linked to Tornado Cash. There is a big debate if they are going to be prosecuted by the US agencies. So it's a funny story, but in the same time, I think it highlights some of the consequences why people should care about their privacy.
Absolutely. I think one of the main challenges, especially for people in the crypto space, to explain to individuals who maybe are not so savvy about the technology, is oftentimes just how incredibly important privacy is in general, and like the years and different sections of the history of cryptography where people like Phil Zimmerman or Bernstein went to court, and well, Phil didn't, but Bernstein did. But anyways, the long story short is like showing that this technology is free speech and protecting it, and creating a precedent that there should be privacy for consumers, and that should be a human right, is extremely challenging. Maybe I'm just blowing up a little bit. Heated topic for someone like me, but I guess that's a good segue. Do you find yourself in a scenario where someone says, well, if you have nothing to hide, then why would you need any privacy in the first place? What would you tell someone that tells you something like that?
Well, I think all comes down to each one definition to privacy and how they understand that. If you look and see some of the examples that I mentioned before, or some other examples with kidnapping, you realize very soon that it's a real concern. It's not something about I have nothing to hide and that's all. Maybe there are some countries where people are being, let's say, forced to different actions, or they have sanctions, not legal sanctions, but they have like social consequences and social sanctions because they interact with a specific thing. I think there is a very a good known case in Canada. There was this truck drivers protest, I think last year or at the beginning of the year. And there were some donations made by different people, some of them through banks, some of them through crypto. It was not something illegal, right? So just to put it out there right from the start. But what happened, what we found out through different discussion, I don't live in Canada, I live in Romania, but we have some colleagues there, we have some friends there, and we heard some stories, is that government went to banks and there was a pressure applied in a way that people who made donations were actually pushed by the banks to close the accounts, and slowly there was a fear building right there for people who donated in crypto. So in general, it's not something that you have to hide in order to have privacy. I think for me, definition of privacy is more like having the freedom to decide to whom you disclose that full transparency. It can be to a specific national agency to make sure you are compliant, to show that you are not doing any criminal activity. But in general, you should be the one in control with that freedom to choose.
Yeah, exactly. And, you know, that was actually a really beautiful and simple way of putting that. So I greatly appreciate it. I think, too, there's sort of a bit of a philosophical question there. You know, I'm not like defending whatever I'm not even too familiar necessarily with what the protest was about, but I think that just the action of forcing someone to close their account if they're not necessarily doing something that is illegal or was illegal prior, you know, is setting a bad precedent. I think if you are in fact a person that is committing some type of crime, then that's the person you go after, but it shouldn't come at the cost of freedom of other people. You know, I don't know, maybe that's just the way I look at it, but I agree with you that if privacy doesn't mean you're doing anything illicit, and if you need to, there should be a mechanism in place for you to disclose whatever you were doing in the case that, you know, law enforcement or the tax person or whatever needs to get a hold of that information.
Exactly, and I think also with Tornado Cash is the case, because even though they were banned, it's not that as if they didn't put ways of or technology out there to be able to disclose to a specific party your activities. So they had some tools, and I think there is a chain analysis report that shows the categorization of the funds that flowed through Tornado Cash, and I think 10% of them was from, let's say, scams, rug pulls, different kind of hacks. 17% or 18% were from sanctioned addresses. So there is a total of 28%, which were like black money, was not something legal, it was something illegal. But there is an entire other section, for example, 50% of the money flow through Tornado Cash comes through DeFi system, and they're not necessarily something illicit or legal. And it's important to have this understanding that even though there are tools, also in some of the cases, this kind of privacy technologies and tools are abused by the bad guys. And this is why we took the decision to have all these integrations with technology providers, that we are able to make sure we only let pass in the people who don't have any illicit activity linked to their let's say trading or transaction.
No, I think that's an amazing innovation as well. I think it is an interesting point to make. I read that report from Chainalysis as well, and it's interesting because they note that 17% of those transactions, like you mentioned, are sanctioned, but they also mentioned that these sanctions were fairly recent. So my guess would be that a lot of those maybe were Russia prior to the Ukraine war, or maybe some other smaller country where maybe transactions are not supposed to happen. But I think it's also kind of tough, because if you're, say, maybe you might be in Venezuela or in Russia, maybe that's a way to transact and get money to your friends or family over there, or maybe a way for you to make money. So I guess that's another philosophical, maybe I'm getting too deep into that. But be that as it may, I think that's awesome that there's a decentralized way to make sure that, you know, bad actors are not abusing technology. I question if the sanctions are going to be that effective, because, you know, if you're a criminal, you'll do a criminal thing anyways. So I wonder how that's going to work, or if these hackers are going to be able to liquidate the ETH or whatever cryptocurrency, if they used one of the forks of Tornado Cash, if they'll be able to liquidate those assets. What do you think?
So I think in general, for most of the hacks that happened, it's really difficult to make use of that money, even prior to sanctioning Tornado Cash, because even though you are able to pass it through Tornado Cash, you'll eventually need to reach a specific exchange to change it into fiat or change it into some, let's say, other ways of payment or, let's say, fiat currencies. And at those, let's say, exit points, there are specific risk procedures. For example, even though you would allow in the past to have funds coming from mixers, you'd have risk policies. For example, you would only allow withdrawal into a specific limit. If you would go beyond that, you need to enforce QIC, to do some investigation in terms of EML, request more documents. So I think even prior to Tornado Cash would have been difficult to make use of that money. Now, of course, it's going to be more difficult. I think the sense that I have for these sanctions and what happened is that we need to take into consideration that Tornado Cash is open source. So anyone can spin a separate mixing pool on their own. Of course, it's also a matter of popularity, because for a mixing pool to work, you need to have lots of activity around it, because that's what adds the noise within the system and helps with the privacy on chain. And I think there are going to be different kind of, let's say, spin-outs of the same technology by different parties. We'll see how that unfolds and how they are going to be linked, maybe back to Tornado Cash and with the sanction from the US. It's something that I'm very curious to see how it unfolds. But seeing how it happened before with torrents, there are people who are downloading different kind of data, like piracy through torrents. They try to close it multiple times, but it keeps spinning up new ones, new servers. I think it's kind of the same thing as long as the technology is there. But I think there is also great debate with the miners, because there is the question that if you are a miner and you include a transaction which interacts with Tornado Cash and you will include it in the next block, if you are considered to be interacting or not with the protocol. So I think it's a big question there. And it's also curiosity to me to see how this is going to be unfolding in the future. Because if you look at where the nodes are hosted, there is a majority of the nodes hosted in Amazon Web Services, some of them in US. So in case that crackdown is going to happen, we are going to see a large migration of the miners and the nodes from the US maybe to other locations, sorry.
Yeah, I mean, that's definitely a very real possibility. The discussion as to especially with everything going on Ethereum with Tornado Cash and all of that, there's been a massive discussion about how decentralized Ethereum actually is, or any proof of stake cryptocurrency for that matter. I met some of the guys at Omnia from at the event in Toronto, Untraceables event, Futurist Conference, and I got to see Vitalik speak, and he's an extremely intelligent individual, and I think he is genuinely trying to make this network as decentralized as possible. Do you think that is still, a realistic possibility, or are we going to see all of these gateways built up and, only some people will be able to use it like the traditional financial market?
I think there is still future and this is still possible to do it. I also look at it from different angles. So the first angle, it's in terms of infrastructure being decentralized, and there are multiple, let's say, projects that are doing that out there. Not necessarily that we are doing it, but there are also, let's say, companies out there who are doing the same thing. And even though they are competitors, we consider it as a good action because it helps the entire ecosystem. So in terms of the infrastructure and hardware footprint, that's something that we see a real progress in other players, which benefits the entire ecosystem. Now, there are some other aspects when it comes to the miners and their power to prioritize transaction a specific block. And I'm talking more about like the MAV, the minor extractable value, or the maximum extractable value. It's an issue, I think, right now that extracts around $650 million in total so far. So basically, this kind of front running and being able to extract value out of ordering the transaction, there is a risk there. And I think Vitalik put it in an article. He was describing it as a time bandit attack. So basically what this allows you to do, if you have the ability to reorder the transactions, what if you can, for a short period of time, rewrite some of the recent n-1, -2 blocks, so the previous 2-3 blocks, and being able to write blocks faster, because in general, blockchains follow the longest path, right? Even if you have small hard forks at the top, in Ethereum, they are known as uncle blocks. If you are able to mine blocks faster for a short period of time, you are able to at least rewrite some of the short-term, let's say, history or what happened in chain. I think this is also one of the reasons why in Ethereum, for example, most of the apps, they wait at least 6 transactions, because the transaction finality, it's not immediately, and you need to wait at least 6 blocks to make sure that that time-bounded attack doesn't happen. Someone doesn't have the capacity right now to rewrite or remine 6 blocks in the past and some in the future to be the longest chain. And an ethical way to achieve that is through what Flashbots is trying to do. There are very high reputation, let's say, project out there. They operate private mempools. So they basically made the MAV to be extractable in an ethical way. Anyone can find different combinations, how can they organize the transactions, put them in a bundle, and then throw the bundle to a specific miner, which is basically saying, you either execute all these transactions in this order, or you don't execute them at all. And in some cases, it has consequences, as mentioned before, with front running, but there are also cases with back running. So back running, it's one way to do it without impacting the actual user. So, you know, the example when I said before that front running is like putting a transaction before, which inflates the price, then the transaction of the victim, which buys at the inflate price, and then the last one, which like the sandwich and sells back the assets. Now, imagine that there is another scenario where someone makes a trade, like a really large trade, and they are selling like 1,000 Bitcoin on a decentralized exchange on Uniswap. They are trading wrapped BTC. Of course, when you trade that specific large amount of BTC, you are going to influence a bit the price on Ethereum, on Uniswap. And backrunning is basically being able to put another transaction right before that is doing arbitrage with some other decentralized exchange there, just to level up the price back again. But you are not impacting the actual user. You are only taking benefit that he actually introduces a movement into the asset price. And you are using that, let's say, information to make sure that you are the first who make the balance between 2 decentralized exchanges.
Wow, I mean, that is one complicated arbitrage, but
it is
very. So, I mean, it's pretty incredible that all these efforts are being done, throughout the community. Do you think that the stake pool operators, some of the larger ones like Binance, Kraken, Coinbase, do you think that they will be not necessarily by OFAC, but maybe by government entities to manipulate any transactions?
Well, I think this is a very interesting question, because first of all, we need to think if there are any ways, I mean, technologically speaking, to detect if someone has deviated from the protocol. And at least how I read the proposal and how the Ethereum is going to transit to proof of stake, there is the possibility, like, you cannot do censorship. So basically what you described before is basically doing censorship, to not include a specific transaction within a block, to make sure you keep denying it. And that censorship, it's censorship, and it's like something that in general Ethereum Foundation and the design of the entire protocol, the Ethereum blockchain, it's a core aspect where they looked at. So there are ways in which, as far as I remember, there are proofs that can be sent by the other miners that prove that you actually behaved against the protocol, and if you do that, your stake is going to be slashed. So this all comes down to, let's say, the economic security of the protocol and how proof of stake is implemented. So basically, before you are a validator or a stake pool validator, you need to stake that specific amount of ether, right? So you put your skin in the game. And this allows that in case you want to misbehave and do something against the protocol and against the community and what has been agreed by consensus, your stake is going to be slashed by consensus by the other players. So it's kind of like a self-healing mechanism, and I think would be very difficult for any stake operator to, let's say, circumvent the way how blockchain should supposed to work.
That's what I'm hoping for. I'm praying for that desperately, especially with all these discussions going on throughout Twitter. You know, and if that is the case, if say these big companies potentially could have their stake slashed, you know, over time, then do you think this might create some degree of chaos where it seems possible that a lot of individuals will choose to unstake their ETH when it's able to be unstaked from Coinbase or Binance or Kraken or from any of these centralized entities, and you know, bring it the traditional way, you know, on chain, pick your validator node and then stake there. Do you think we're on the precipice of perhaps a change like that for Ethereum?
Well, I think I'm not in the position to give a clear answer. I'm not part of the Ethereum Foundation. I don't know exactly the plans there and how they see it. But one thing I can say it for sure, I think Ethereum is one of the most stress test networks out there. Through different networks, through different kind of scenarios. I think if you think about back in the days before NFTs were a thing, we had the crypto kittens, right? And there was a clear example, like was one of the first examples of NFTs, but was also one of the first cases with like put down the network in terms of network congestion and how many transactions there were out there. So I think throughout time, there were multiple stress situations for the Ethereum, and in general, how the community responded to that, because it's not only something in Ethereum Foundation hands, but it's also about how community reacts to this, because there are proposals, there are people who are the community who is voting on the proposal and implementing the nodes, soft forks, hard forks, and the way how the community responded so far really gives me the confidence that any case of this chaos that is going to happen in the future, it's going to turn out in the final, let's say, position in a good way. Because in general, there is a good, let's say, sense of the community and being able to be agile in general. I think this is the good word.
Yeah, I mean, I still believe in Ethereum. I still hold Ethereum. I only bring up these questions just because I was curious to get the perspective of an engineer and an expert in the space, and I really appreciate it. You're very reassuring.
Sure. At least that's my opinion, how I see things from a not necessarily a technical point of view, but also in terms of operation and how things rolled out in the past. So I think in general there is I think it's something that I read in a blog post of Vitalik. It's called something like in protection or with the Bitcoin maximalists. It's something like taking their side, because they tend to be very reluctant to changes. They want to maintain the protocol as simple as you can. Whereas in Ethereum and how the community evolved in time as the blockchain is that you tend to have like puzzle money. You have different components who build on different components and so on. And this kind of complexity adds systematic risk. And I think this is one of the biggest differences between, let's say, the Bitcoin side, where things are more stable. They want to keep it as simple as possible. But in that direction, we cannot have innovations such as smart contracts, DeFi contracts. It's very hard to do it on top of Bitcoin. But in the same time, on Ethereum, you have all this, let's say, systematic complexity, which not only adds innovation and helps innovation, but it also adds risk. And we can see that what happened with the bridges hacks. I think if you just count the numbers, they're around $300 million or even more. I think there are $3 billion losses in bridge hacks. All of them happened like since the beginning of the year, from Axie Infinity to what happened with Solana hack, wormhole bridge. So there are lots of examples how if one single piece fails, how this impacts the upcoming components in the chain of integration.
I think it's just that extreme amount of detail. Like I believe in Bitcoin as well for its value and its security. But the innovation in Ethereum and the discussions that you read in those groups are absolutely fascinating. And like we're in this period in time where now someone in, say, Zimbabwe can gain access to a US dollar and get a yield of 3%, which was unfounded and unheard of unless you were an institutional investor from the area at that time. So I think we're in the right direction for sure. I think Ethereum has a bright future ahead of it, and this is a bump in the road. So before we continue, we have a quick message from our sponsors. Degens for a Brighter Future is excited to announce that we are partnering with MEXC Global, one of the world's largest crypto exchanges. And if you sign up with our affiliate link below, make a deposit and start trading, there's the possibility that you could win $4,100. If you're not familiar with MEXC Global, they have a wide range of awesome products for you to use, such as spot trading, cryptocurrency, options trading, ETFs, and even the ability to copy trade some of the world's greatest traders. So if any of this sounds interesting to you, then what are you waiting for? Use our affiliate link below, sign up, and start trading today. And now back to our regularly scheduled program. I think that oftentimes the challenge is that privacy still has such a negative stigma. That's a big reason why I wanted you to come on, because people don't realize like that privacy is a part of safety. That if we didn't have PGP, email would be like anybody could see it. You know, it would be awful. You know, so I mean, just people needing to understand the importance of cryptography, and I think finding that fine line where we can be compliant, we can reveal information when we need to, and also at the same time, I can be a pseudonymous person who is independent and can control what I do with my finances. If I do something wrong, go after me. You know, I don't know. That's so.
Yeah, exactly. No, I fully subscribe to that.
Yeah, so I mean, I 100% appreciate what you guys are doing, because that's a massive challenge right now. Like when I was reading the white paper when you were discussing to me off-chain privacy, that resonated with me a lot. You know, and I think it will benefit people in the long run if they value not just privacy but their own privacy. And I think people don't realize how naked they are on the internet.
Yeah, I think it's indeed something in terms of in general community education, but not only for the retail, it's also something about B2B, because what we found out by testing the market out there and having different discussions with ecosystem partners, with different stakeholders, is that if you talk to a CEO, to a legal executive, someone from a company, for example, who is a developer of a wallet, let's say, they really understand that they actually carry the legal risk in face of the regulators if their users are doing any nasty stuff with their wallet, right?
Mm-hmm.
So I think from that perspective, what is our argument when we try and have these conversations with all the partners out there is that they do want to integrate the secure connections and compliant for the users, not only to like have an extra edge in the market for their competitors to be able to be the only ones, let's say wallet, so a few wallet that offers end-to-end privacy to their users, but it's also a way for the companies to protect themselves against that risk in face of the regulators. Because oftentimes what I found here in Europe with regulation coming is that it's not that easy to understand, and you need to spend a lot of resources to put it all together to understand what it is about, how we can tackle it, and how we can approach this and still maintain things compliant. And because there is this noise, people don't understand exactly this stuff. There is this approach where we either block anyone or you let pass everyone. The second option is rarely the case. It's more likely the first one, when you block the entire user base because you don't know exactly how to configure granular access specific to those, let's say, requirements and compliance needs. And I think that was some of the arguments that we heard in the market, and was a good signal for us, because we also are in the product market fit and we try to assess in which direction to go forward. And this part with privacy and compliance, of course, one of the most engaging subjects that we opened in the market.
Yeah, and I think like that's a really important thing to translate is that privacy for the most part is just a tool like anything else, and there's going to always be someone that is going to abuse it. And actually, now I have a really interesting question for you. You said you were working on a pending patent for decentralized identity, if I understood you correctly. So
Yeah.
I think like in many ways, when I was at the Futurist conference, one of the really interesting patterns that I saw with a lot of the blockchains was some type of integration of a sole token or decentralized identity. Do you think that perhaps what might be the overlay here is that governments are wanting some type of merit-based system where the wallet comes in, there must be some type of decentralized identity attached to it. Maybe it's pseudonymous, and that wallet would indicate whether someone has done something nefarious or not? Or do you think, because I'll be honest with you, I think the laws, the travel rule that they're trying to pass in Europe, I don't know if it's fully passed, but
it's not yet. It's on the draft of MEL5. I think it's still on discussions. It's based on the FATF directions. So as far as I know, it's still in discussions, but I do understand. I am on the same page as you. And I think it doesn't apply to crypto transactions at all. It's only on classical fiat.
Ah, I see. So it would just be the process of purchasing the crypto or transferring it from one wallet to another. But outside of that, everything you do in DeFi is not.
Yeah, that's good. Yeah. So I think you touched a really important point with identity on chain, and maybe having some proof that you are somehow known to a specific entity, because this reduces the risk out there. I have been involved in multiple discussions when it comes to self-sovereign identity, how to do it in a private way, how to do it on chain and demonstrate. I also had some insights because we at Omnia, we had a technical discussion with the European Central Bank. So basically, we had discussions about the digital euro that it's upcoming, how we can help and support in that direction, how we can make sure that we can ensure a privacy level of the digital euro in the same way as you have it as cash, because that's the benchmark right now. You need to have privacy almost or at the exact same level as you have in cash, in both directions. So we had some interesting discussions there, and I did a lot of deep on CBDC, on central bank digital currency. And indeed, there are some ways in which privacy is important and compliance in general. And if you look about how other players with the Connex activity, they did it. Aave, for example, they have a pool for institutional lendings, right? So what they do, they whitelist some of the addresses or the actors from the institutional side. So it's very similar if you look at it as if you're doing one on-chain QIC or a self-sovereign identity where they don't put all the information about their identity on-chain, but at least they have a whitelist-based access on that specific lending pool because they did some pre-authorized actions. And translating back to central bank digital currency, I think this is something that we may see in the future because if you look at the ecosystem in the banking right now, you have the central bank and you have commercial banks, right? You cannot issue a stable coin, central bank stable coin, and issue it directly to users, because if you do that, you will skip all the commercial banks. You basically void all their businesses, and they are the pillars of the economy. They support the interest, the lending. They are the oil in all this moving parts mechanic of the economic and of the economic infrastructure in general. So there are different discussions right now where the central bank issues the stablecoin, the central bank digital currency, but they still pass some of the tasks to commercial banks, like doing QIC, making sure that their identity is verified, anti-money laundering checks, and all that information. So it's like a two-staged process. And in this part, with QIC performed by the commercial banks, is something that, in my opinion, is going to unfold. For example, if we have you have a bank account at a specific bank, you passed QIC, so basically you have an on-chain identity verified, similar to a self-sovereign identity, and you can use that to transact that stable coin issued by the central bank. But in the same time, you have to look at the underbanked or the non-banked people, right? And some of the discussions that I've seen in that direction is that there may be a specific threshold. And if I'm not mistaken, this is how it's implemented right now, the pilot with the central bank digital currency in China. If you are not transactive over, I don't know, equivalent of $1,000 or something like that, you don't need to have a QIC with the bank. You can just operate that stablecoin on your own with just created a fresh wallet. It's very similar to travel rule, I think, if we look at it into like on a parallel.
Do you think that all of the FATFs regulation, all of the FATFs recommendations will inevitably take over maybe this is not a fair question to ask, but do you think that that inevitably all of the FATFs recommendations are going to be rolled out?
I think they're going to be, but not all of them once. I think they're going to be multiple stages. As we have seen it in Europe, some of them are included in the draft for AML Directive 5. As far as I know, it's still in a draft, hasn't been approved yet, but most of the FAT recommendations were passed into that directive, a draft of the directive. And some of them, I think they are going to be included in the future. But I think there is still needs to be a lot of work to understand what's the entire, let's say, ecosystem impact of applying those recommendations right away. You need to find their places and liaison with existing frameworks to be able to do that without creating a huge impact.
I mean, I look at them with a lot of skepticism. If you know, at the current state, if only 0.01% of all transactions are nefarious, then you know that still means that the majority of money laundering or any other nefarious activity is done with cash, which is completely untraceable, whether it's euros or dollars. Right now, probably dollars, but but you know, with that being said, that's why I hold a lot of skepticism. It's like we have seen like really bad things happen in crypto. There's no doubt about it. And I think people forget that crypto is like a technology first before it's some type of money. It's a technology. And just like how when the cars first came out, they didn't have airbags. Like people don't remember that. But yeah, exactly. Cars never had airbags. Cars didn't have
safety features. Safety features. Yeah.
No safety features at all. And you know, over time, these things are going to improve. So it could be an unpopular opinion with the ECB, but I am very hopeful that even though I cannot speak as to whether Do Kwon like purposefully you know, injured so many people financially, or if it was a try and a failure, whatever the case may be, I do hope that the technology behind a truly decentralized stablecoin can be done. I love the fact that if I have someone who's in a foreign country and maybe they need money, I could just send it. No bank in between, no BS. And I feel like some of this,
no 3 days delay.
Yeah, I mean, I'm not going to ask you to say anything that you know, you are where you are. But yeah, that's just, I just feel like it's adding more friction that doesn't need to be there. And like, who knows, like if I have a friend or someone I love in another country and they need help, that's such a convenient, easy way to do it versus having to like call my bank, lose 10%. Like, give me a break. All right. Anyways, back to Omnia. Love this philosophical stuff we're getting into. And also that was very enlightening about CBDCs and the travel rule. Thank you so much for breaking that down.
Sure, you're welcome.
So the next thing I wanted to ask you, so Omnia is bringing in, is having a lot of different nodes that collaborate on a Mixnet. And when you do that, how are you maintaining that level of decentralization and also anonymity between these nodes? How do you do that?
Yeah, sure. So one important distinction that I would like to make here is with regards to the nodes that are composing the mixnets. We call them privacy relayers. And even though in the beginning we started and we are looking to implement ourselves, we soon found out that by design, you need to have different kind of, let's say, traffic that passes through the Mixnet. If we were to implement it by ourselves, we'll only have blockchain traffic, right? And the idea is that you want more diversified traffic into this Mixnet. So there are partners out there with whom we discuss. I can mention here NEM project. I can mention Hopper. They are doing Mixnets. They all did a great job, both of them. So the idea is that they are building these Mixnets, which are general purpose, right? So they are using it for web browsing. They are using it for secure chat, for secure messaging, different kind of applications. And one of the applications here can be access to blockchain. And this is how we are leveraging that technology. And this is why I mentioned that we don't want to reinvent the wheel. There has been progress for 3, 4, 5 years in some cases. NIM at the basis, they started from Panoramics, which is a European research funded project. This is how they spin their work. So there was a lot of research from the academia right there. So we find it like an advantage and go-to-market strategy to leverage an existing progress and work it towards there. So now when it comes to how decentralized this is, we are looking into operate into some of these, let's say, networks, which are incentivized by their own. They have their own system to incentivize people to run nodes, to be more decentralized. And in the same time, we have our own decentralization challenge with the blockchain nodes, because Omnia is not necessarily a layer 1. We called ourselves a layer 0, where infrastructure or a middleware, right? So that we don't have our own blockchain. We are mainly a protocol that help with secure access to different blockchains. And right now we support 5 blockchains. We have Ethereum, have Bitcoin, Binance Smart Chain, Avalanche, Polygon. We're adding Optimism and Arbitrum the following days, maybe next week. And then, of course, we are looking into Near as well. We've seen a high growth in adopting that network, especially for the developers. So it's important for us. So that's some of the networks that we support. And basically, if someone wants to onboard a node on Ethereum, on Binance, on Ethereum, they can just follow the usual, let's say, guide, how to spin up that nodes. And in the end, they only need to couple it to Omnia. And this will join a large resource pool that we have across the world that we use to give secure access. After, of course, we add that Mixnets on top of it to make sure we secure the connections. And all the revenue that we generate through these subscriptions, we share back with the node owners, because they're actually the ones who put their infrastructure, their hardware at work. We have a wait list right now. I think there are around 1,000 persons who joined the wait list for registering the nodes. Can be people at home with a PC that they didn't use. Can be, let's say, small companies which own like 5 servers in a data center and they don't use it anymore. And in some cases, and this is, I think, very important, we have been in discussions with some RPC providers out there. Even though they are kind of indirect competitors, they are partners in the same time. So I'm not going to give a clear example, a name, but imagine that you bought a subscription at, let's say, one RPC provider. You pay $1,000 per month. You already bought like a 1-year subscription. And after 3 months, you are not utilizing that subscription 100% that resource. So maybe you are just utilizing 50% of that resource. What you can do, you can couple that unused resource to Omnia, which is serving others and is generating income for you. So it's basically like if you have a subscription at other, let's say, players out there, RPC providers, and you already paid and you don't use it 100%, you can lower your infrastructure cost by coupling to Omnia and receive rewards such that other can reuse that. It's mostly like a reuse model and make sure like it's a sharing economy.
No, that's amazing. I mean, one thing I've always admired about the technology in the crypto space is like this big amalgamation of like economics, computer science, cryptography, and finance. And in this case, it just shows like how like you can create an incentive that benefits all of the users. You know, someone will be able to encrypt their off-chain activity while also someone else is getting paid just for keeping that computer running and acting as a node provider. So, I mean, that's fantastic. I mean, it's a great sales pitch for sure.
Yeah.
So, all right, so back to the question. So, um, how do you find the experience of bringing Omnia's service in a B2B setting? Who is the customer? I mean, obviously, for example, someone like me would use Omnia to access, you know, a blockchain without my off-chain activity being visible. You know, so how do you pursue uh, a client that's a business? Are you focusing mostly on institutional investment firms or anything like that?
No, it's we have different segments. We actually spend a lot of time into defining each customer profile with each message positioning for it. So the first one is with the retail, like the normal users on crypto. What they can do basically, this is why we did a tutorial on our app. Is basically anyone is able to generate an endpoint and configure that endpoint or secure connection, how we called it, into their MetaMask wallet, because MetaMask allows you to customize your connection to blockchain, basically adding a new network, but that network can still be Ethereum, just with a different path within the network. And that's what we do from the retail. And from the message positioning point of view for the retail, we focus a lot on customer protection, because I think this is one of the most important aspects out there. And it's also something because we have this unique position in the market. Maybe in the future we are able to prevent scams. So let's say that you are a user just onboarding crypto 6 months ago, don't really understand how smart contracts work and how someone can make a scam with a different smart contract address. If you make the mistake and sign a transaction for that smart contract, maybe because when you are in the process, we are able to send you a notification or maybe drop the transaction for you or ask you, are you sure that you want to do this? Because from our knowledge, it's something related to a scam, and make the people think twice. This is something that we are looking into because I think customer protection in general, it's something very important and it's a rising concern. Now, there are other areas where we look at in the B2B side. One of them, of course, is compliance. And here we refer to like the CEO, the legal executive, in general, executive people who understand that they carry the legal risk in face of the regulators if their user base of their specific app tries to do any illicit activity. So for that kind of segment, compliance is very important. We also have wallets. For wallets in general, it's appealing the privacy part because it gives them the extra edge. Wallet markets right now, it's red ocean. I think there are tens, hundreds, if not thousands of wallets out there. So it's a really competitive landscape. So by us offering them end-to-end privacy to their users gives them that extra edge in the face of their competitors. And then we look at centralized exchanges, decentralized exchanges. For these two categories, I think what's more important and relevant is the high availability. If we look in the past, and I don't mean to throw bad things left and right, but there were cases with some big RPC providers which relied all their infrastructure, or let's say on centralized servers on Amazon Web Services.
Right.
When Amazon Web Services had an outage, they had an outage, and because more than 50% of Ethereum applications were relying on their services, we had entire days with exchanges being down, decentralized exchanges being down, wallets being down, unable to be used by the community. So with regards to exchanges, it's very important, the high availability argument. And because we are able to leverage this large pool, which is distributed throughout the entire world, it ensures the high availability. It's a very low chance that thousands of nodes across the entire world get down all in the same time. So basically, these are some of the advantages that we have, of course, combined with a multi-cloud strategy because we need to have our own backup nodes, combined with a different load balancing based on geolocation to make sure that if you are from Asia, we route your request closer to you such that you have a small delay, don't have like a large delay by routing the traffic onto the US. So we have all these kind of different approaches to make sure that we also deliver that high availability into the market. And these are some of the segments and different messaging that we put out there, tested, of course, for each of these segments.
That's fantastic. I mean, I'm sure one day you'll invite me to a boat party somewhere. I'll find out. Anyhow.
Looking forward to.
So I guess to close in this summary, this has been a very complicated month in August for privacy. I'm very grateful that there's people like you that are taking it a step further, trying to not hide, but encrypt and protect information that otherwise would be visible. Sorry, right language there. So what I wanted to give you the opportunity to talk about is what inspired you to work with your brother to start Omnia, and what do you think it means for cryptocurrency as a whole, or for the industry?
Well, I think from my point of view, why I started first working on blockchain and crypto in general was the passion for cryptography. I've worked for a long time on cryptography, on applied encryption, cryptography, math, all that complicated stuff. I really loved it. So for me, it was a very easy transit from like the private keys, signatures into blockchain, where all the wallets have a private key. It was really easy to understand all the, let's say, technology building blocks. But then, because I wasn't so aware in 2013 to 2014, I wasn't that familiar with the economic incentive of all this interesting stuff. I started getting involved more and more. And that's how I actually end up working in that project where I have the pending patent on self-sovereign identity. In the same time, Christian, my brother and co-founder, he was chasing his PhD. It's not a coincidence, he was also working on privacy enhancing technologies. So we had that mix of privacy and security from before. And we started Omnia because basically we were searching that gap with privacy out there. And we were looking left and right, and no one was talking about off-chain privacy and how this impacts like the entire flow from the start to end, from the wallet to the actual blockchain node. But in the same time, from what it means from the ecosystem, we embedded that really decentralized narrative in what we do, because when we started working on this, we were looking to see what kind of providers can we use. That was the point when we found out about those outages, RPC providers being down. So we digged even more into this problem, and we saw even Vitalik was speaking into some of these issues with there is a bias where there are too many light nodes and very few full nodes who need to service these light nodes. So there is a bias where the network is not healthy because of that. There are not enough full nodes. So we wanted to make it like in a very professional way, because most of the people think that blockchain is decentralized, but if you look closely, the access points, the nodes, the access points, the infrastructure is still centralized. The blockchain, it is indeed with the centralized consensus, decentralized consensus, and so on, but the access points are still centralized. And we wanted to tackle that issue as well, because it goes hand in hand with privacy. Because if we have decentralization, we think that in general, this was a hard thing to approach, and it's trying to be approached by different players out there. But once you have decentralization, you can imagine that you have multiple entities with nodes which now have access to your data. Not only a specific RPC provider, but now you have multiple people from the ecosystem, which may be bad intended, maybe. So this is why we think that privacy works hand in hand with decentralization, because in order to achieve all that security and still protect the end user, you need to embed these two right from the design. And it was something that we were good at. I mean, we worked in privacy and security and national defense for many years, and it was something natural for us to do.
No, that's fantastic, and you hit the nail on the head. On the head. Oh, I disappeared again. But anyhow, I agree with you 100%. If there is no privacy, there is no decentralization. So I appreciate what you guys are doing. You're making the space better, and I look forward to seeing you again. Thank you so much for coming onto my show. And for anyone watching, Degens safely, I will put all of the links for Omnia below for anyone who wants to learn more. Maybe you want to become a node and get on that wait list. I'll definitely put all the info for you. Check out the links for all of our social media, including Omnia's social media. And if you are interested in trading, consider using our affiliate link for MEXC. Thank you guys so much, and enjoy the rest of your evening. Thank you for coming on.
Thanks for having me. I had a great time.
Welcome to Degens for Writers.